Hello, David Lewis here, and today I am profiling a software program called ValueTool. ValueTool is available on my website at twintierfinancial.com/ValueTool. It's also available at ValueTool.com. If you do go to the corporate site, which is ValueTool.com, you can sign up for a free subscription. It is a trial, of course, and you can profile, I believe it's a handful of stocks to see how the software works. And the subscription price is $25 a month. If you go to my website, you are able to take advantage of a 20% discount. Same exact software, just a cheaper price. Either way is fine. It just depends on whether or not you want to get a discount or not, if you like the software that I'm about to show you. Here is when you sign up for the ValueTool software. Here, when you log in, this is the screen that you will see, and you have a number of different options, worksheets that you can display several different stocks you can compare at the same time. What ValueTool will do is basically automate the process of value investing. What it does is gathers all the information about a company from the Securities and Exchange Commission and does all of the calculations required through fundamental analysis, and then produces a graph in about half a second. This graph will basically tell you whether or not the company is overvalued or undervalued. The first company we're going to look at today is a company called Zap. Zap stands for Zero Air Pollution. Basically, as you can see here, Zap was founded with strong core values that prioritize the environment, social responsibility, and sustainable business practices. The graph supplied at investsourceinc.com. It looks like the company's done okay. It's done fairly well. If you were just looking at the technicals, or if you were looking at historical performance, you might purchase this stock with the expectation it would do well. And if you read all the stories about it, the company, you might think this is an excellent company to invest in. But we're not interested in stories. We want to see what the value of the company really is. So we go to ValueTool. We enter the stock symbol, and we take a look at the valuation. We can see the stock price here. It's 82 cents. And we have a graph here that will show a valuation. Zero means that it has the valuation is zero. Basically, it's not overvalued, it's not undervalued. The stock price is reflective of its true value. So at this point, there's not much to look at. It's not undervalued, it's not overvalued. It doesn't necessarily represent a good buy. And what we look at here is, what we're looking at are 7 different indicators: dividend discount model, the free cash flow to equity, free cash flow to firm, price to earnings ratio, price to cash flow, price to book value, and of course price to sales. And each one of these indicators we can click on, and it'll drill down and it'll show us the actual calculations that are done. And you can see projected dividends per share, and we just drill down and we can take a look at all of the different calculations. A lot of software you notice on the market, they hide this. They won't tell you how they're coming up with the calculations. ValueTool is completely transparent. Okay, the second company we're going to look at is the Chili Fund. The Chili Fund is a non-diversified closed-end management investment company, and it invests in numerous companies in Chile. And so this was obtained through Google Finance, but I'm sure you could find this company anywhere on the internet. If you Google it, go to Yahoo, We see the Chile fund, and here's its valuation. Represents a tremendous value. Green bars reaching up represent a positive valuation, especially if they go over the stock price. We can see $18.20. The higher above that, the greater the valuation, the better the buy. These squiggly lines simply mean that the valuation is above 50. This works, of course, in reverse. Had this been down into the red, you would have seen a red bar coming down, going beyond the 50 mark here. And if you see, typically we don't like to see more than a negative valuation, but if you see a lot of negative valuations, obviously that means that it's going to mean that it's overvalued, not a good buy. This means that this graph like this means that the stock is undervalued. Again, you can click on each of the indicators, and you can drill down and take a look at all the calculations that were done. If you'd like more information on the software ValueTool, you can come to my website. It's www.twintierfinancial.com/ValueTool. Thank you.